Well, back with the special edition of State of the Economy, we're talking about the GDP numbers that we've just seen. But in light of this, let's also talk about the capital expenditure that we've seen, both private and public. Debapam, in your view, the kind of public capex or the government capex that we've seen that has amped up, we've achieved about 53% of the target for FY26 in the first half. How confident are you of meeting this target of the capex? Because our sources indicate that in this budget there might be a 10 to 15% hike in the capex figure that the government may announce. Any thoughts on this, and where do you think we're progressing on the capex front?
Optimistic about the capex situation, not just the public capex situation, but also the emerging private capex situation. In fact, for the first time in the last so many years, government capex is finally crowding in or attracting private capex as well. As I was mentioning earlier, with the interest rates coming down, both for corporate India as well as the retail segment, there is once again renewed interest amongst medium-scale organizations as well as large-scale organizations to borrow to deploy in the fields as greenfield or brownfield projects, which is a very interesting and encouraging sign. So I'm sure the government will continue with the good work that they have been doing. They should be able to meet the capex target of about 10 lakh crores they had for this year, as well as at the same point of time it will be complemented with a significant pickup in private capex, which the ball has already started rolling. It will gather a lot of momentum in H2 of this year as far as private capex is concerned. And remember, the maximum amount of job creation that happens, the impact of the trickle-down effect of private capex is way higher than that of public capex. So I'm expecting the issue of job creation, issue of quality employment also to start gradually getting resolved by the end of this financial year onwards. So this is a good time to be in India, to be specific from a business capex point of view.
To be in India right now. Garima, weigh in and give us your sense on where do you think the risk to this sustenance in GDP could lie, because we're inching closer to a first tranche of the trade deal with the US, at least from the comments of the Commerce Minister earlier today. Macros are looking supportive. Rainfall this year has been very healthy. What could prove to be a risk to the sustenance of these GDP numbers?
I think on the positive side, I'll say whatever data has been coming, especially for auto sales, post-festive so far, 2 weeks after post-festive, the high-frequency data that you look at, the demand on entry-level segment and in general, both PVs and four-wheelers have held up. So that is one positive signal. Second, you're seeing yet not seeing an increase in inflationary spiral, despite very concentrated and disruptive rains towards the end of the monsoon season. So despite damages, it's not yet reflecting in increase in food inflation, which is positive from household balance sheet point of view. In terms of negatives, I think one big negative to watch out for is going to be the fact that your normal GDP growth, because inflation is so low and the deflator is at where it is, where WP at this financial year barely likely to touch positive figure, we are seeing a nominal GDP growth which is abysmally low. And such a low print of nominal GDP growth does not bode well, and particularly does not bode well for earnings outlook in the economy. Our analysis suggests that every 100 basis point increase in nominal GDP tends to positively impact earnings growth for the corporate sector by 30 to 40 basis points. And remember, ultimately, what is growth? Growth is nothing but the nominal value of what is spent. And if the normal value of all goods and services spent comes down, it will impact everything from your tax collections to your earnings growth. So I would say the one risk to watch out for, and probably a not so positive element in the GDP prints of last 2 quarters, has been very low nominal GDP.
Okay, so that's the outlook coming in. Nominal GDP growth also at 8.7%, looking very, very healthy. But with that, Garima, Aditi and Debapam, thank you so much for your time and your presence on this special edition of Eye on the Economy on our GDP discussion today.
Well,